Can we focus on supply and demand? Okay, sure, we can do that. Okay, so we're gonna focus on supply and demand. So supply and demand, once again, uh, the concept is pretty straightforward. Let me see if I can do this properly. What I might do is, let me find some papers first. Papers, yes, paper. Okay, so supply and demand. Let's do this without a chart so that people understand. Okay, so this is your resistance level. This is your support level, right? What happens is price moves up and down, right? And then, it'll break down or maybe it'll break up. That's, pretty straightforward. Everyone has an understanding of that. But what is supply and demand? So supply is going to be on the top, right? So this is your supply and this is your demand, okay? So the relationship between supply and demand is economics, okay? So as demand, or as the request for supply goes up, demand decreases, right? So supply is now big. Now we need demand to go back through here. So what you are looking at as you do supply and demand, once again, we'll draw this out, supply and demand, is price will spike through and hit this pool of liquidity, right? So it hit the supply. So basically candles went up, pushed through a level. Now we have to go back the other way and give it to the demand, right? So you're basically taking a package, right? So this is your Christmas or holiday package. I don't want to offend anybody. This is your package, right? We have a supply. We're FedEx. We have to go and meet it back down over here. So now when you go to your charts and you say, okay, well, what's the difference between supply and demand and support and resistance? When we go into your charts, you can clearly see now where we went into a supply area, right? And then as we start to go a little bit further, we can see that hopefully there'll be a demand area coming up soon, right? We don't have a demand. One can argue that this was a demand. Maybe we'll return back to it eventually, but you can see what's happening, right? So this was your supply. You got your supply. We dragged it right back down into the demand area, right? So if we want to say this was our demand area, we can say that. Now you can start to see it taking off as it's going through. We'll probably continue to move a little bit further and then go all the way up back into supply. Now, you can see how this is starting to work now because every time we come back into this demand area, we're coming back into it less and less, right? So if we were to say that this was a demand section of our zones, right, we're touching it less and less, and that's giving it fuel. So basically what's happening is we're tapping it and pushing away, tapping it, pushing it away. And the first tap is usually the deepest, so we get that huge pullback. And as we come back, now we're not getting so much of a pullback to up here. Now it's only coming up to here. Now it's only coming up to here. Now it's coming up to over to here. But you can start to see where the wicks are starting to start to move in that direction. So you're creating higher lows at that point, and these are your higher highs. So now you have a channel, right? So if we turned around and drew out a channel, this would be your channel. You can have a channel here. This could be a channel here, right? So you can start to see how everything's starting to form. So, all things being equal, we could probably go to here, and maybe then we end up going to here before we then end up going further up, right? So, you have your channel, so you say, okay, price is going to go to this level, drop back down a bit, then price is going to go back up to this level. Eventually, we want to get back to this original premium price, which is your supply level. So you can see these levels on all different time frames, right? So if you go into your 15-minute, you can see it in your 15-minute. This is not the greatest example, but let's take a look. Okay, so on the 15-minute, here's a better example. So here's your supply. There was your demand, right? You had that huge drop, single tap, pull up. You can consider this like a demand zone here. Consider that a demand zone there, right? It's not as aggressive. This, one could say that this was a supply. We had a single tap and rejection. So you start to see it happen a little bit more, because now when you start to run this across, you can start to see how things start to match up with that area, especially for an upwards trend, right? So here you had a supply zone, right? Tap back over to here, pulled back up, but now we go across, same thing. So we tapped up here, pulled down, tapped over here, maybe we'll pull down a little bit more, but all things being equal, we should return to this section again. More than likely, when we go all the way across, we should return to that full section there. So that's your supply and demand at that point. Okay. Okay. Okay, just going through some of these questions here. Okay, so support and resistance. So once again, we talked about support and resistance. Support and resistance are multiple touches. So these are my support and resistance lines. So if I go on to the hour, the 4 hour, you can see we have multiple touches, right? Sorry, I just got this. So if I zoom in here, you can see we have multiple touches, and then we pulled back, and then now we touched up here and we pulled back again, right? So you can see where you have multiple touches. As you go through your levels, maybe the hourly will be a little bit better. You can see we tapped and pulled back, but we're touching that multiple times. It doesn't necessarily mean that this is the right number. So the number that I've drawn here, like 1294, that's the exact mark. Maybe it's over here. Maybe it's a little bit further over here. So when people draw price zones at support and resistance, there's a difference. It's because we want to capture all of that level to say, hey, this could still be resistance as well. This could be resistance, you know, maybe this is a little bit of resistance, but it's this entire section here. So that's sort of your price zone as well, right? So when you talk about price zones, that's what you're doing. And that's why I say it's important to wait for confirmation that we're moving in a different direction, right? So here as an example, so let me clear this and get this a little bit cleaner. Oh, I use that color anyway, so change the pen color. Yeah, let's do this. No, that's not good. Dark green, okay. So as an example here, right? So you'd say, okay, are we still going up? We don't know if we're going back down again. We need to wait till we get out of this area of resistance to say, hey, now we've got a drop. So all this stuff over here is hard to trade because it's consolidation. You want a full, you know, you want a few candles here. We've got a couple hours of candles where we're pulling away from that resistance area. Similar to here with support is, you know, if you're buying when we breach support, we need confirmation that we're getting out of this area of support, right? So that's why I always say wait for confirms. You got 1, 2 candles, like, so you can see clearly here, as an example, if I said, okay, we're at support, everyone's like, oh, buy, 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 right? You don't necessarily know we've cleared it. Even if you got in over here, you know, later on in the morning of the USA session, you still had a lot of opportunity to ride it back up. You didn't have to try and time your trade. So that's why I'm saying give yourself an opportunity to see the market actually pushing in this direction or pushing in this direction and take those trades. And how you're doing that is you're going into your shorter time frames. So as you start to go through your shorter time frames, so as an example, your 15-minute, let me turn off that. So if we go through our 15-minute time frames and we zoom in a little bit more, you can see here, 15-minute time frames, this is 6:45 a.m., right? You can start to see that the momentum shifting, going up. But more importantly, we're getting away from this support line, right? So you can say, as we start to move, right? So we went through the London session, we broke support a bit, but then we came back up, we came further up, came back down, and as we're starting to push through, this starts to give you a little bit of a hint, because now you have this huge pull up and now a push back down to get liquidity, and then as these pairs or as these candles in this time frame start moving in this direction, you can start now mapping out potential exits, right? Like the first one we talked about this morning, if you're on the webinar this morning, was filling this wick, right? When we get over here, maybe now we're going to continue further through, and what you would do is maybe jump into the hour time frame and you would say, hey, what's going on there? Then you would go to the 4-hour time frame and say what's going on there. So what we'll do is jump into those right now, and I'll give you an example of what we were looking at as you go through the 4-hour time frame. So once again, we're in the 4-hour time frame, right? So this is in the morning. You had this wick here, right? In the 4-hour time frame. This wick should fill. Why? Because we have momentum moving in this direction. We have this huge candle over here. We had what we consider, you know, a demand zone right here. And you could say, okay, we tapped into it and now we're pushing up. And where should we go? We should probably go into this area here. So once again, we have a tap and a rejection here. All things being equal, we should go up and fill this wick across here. Because why? This wick, right? It all has similar patterns, and the idea is when we have momentum, we should go there. Now, the key, once again, is when we talk about momentum and we look left, this is a resistance level. This is a pretty hard resistance level. So if this starts to shift down and we get candles moving in this direction, then you know that you're going back potentially this level. But at first, you're probably dropping to this area here because there is a price rejection at that point. So that's what you're looking for in terms of the way the candles are moving, but also understanding where you are in your overall session too. Okay, that's good. Copy trade is a reality. Yes, later on it will be. Can you draw zones? I just did. I want to ask you about entries after you see the setup and how you enter to hold the trade and drawdown. It's not necessarily holding the trade and drawdown, it's understanding where you're looking to take the trade and why you're looking to take it. A lot of people aren't focused on the details, right? So if we drop back into the 15-minute session entries, right? Even if you jump into the 5-minute, so maybe the 5-minute will help us and we'll be a little bit more precise with this. Let me get into today's 5-minute, right? So let's go. Okay, so going down. I just like to center my screen a bit. Okay, so here's your 5-minute frames, right? Okay, so once again, here's where I'm waking up, right? So this is like 6:30. That's what I'm waking up. What I did is I looked at the 15-minute and we had this wick, right? That's what we were looking at. And I said, oh, we should fill that wick. So as we start to move, you're going to have all this consolidation going up and down, nothing really moving. So we can all agree that we're sort of consolidating. But then as you start to move through, you can start to see now the market's pushing up. This is your USA Open, right? 1500 GMT is USA Open. Candle's starting to move. We pulled back on the 5-minute, pushed down. Now we're starting to move. But you can start to see how the candles are moving. So if I turn around and I take a buy here, where's my stop loss going to be? My stop loss has to be here, right? Because I have to expect excuse me, the market to pull up and potentially drop all the way back down before shooting back up again. The mistake that you make as a trader is you look at your 5-minute candles and you're like, oh, okay, I took a buy here, stop loss right here. That's not trading. You have to let the movements exhaust. And when I say, you know, where you're placing your orders and what you're doing, you go onto your higher time frames, because more than likely, if you jump into your higher time frames, it's going to give you a better indication of what exactly is happening in the market, right? So we're here. Let's go back to, let's zoom in a bit. So you can see right here, as an example, you know, this is your 7 a.m. candle. I'm putting my stop right about here, right? I'm putting my stop over here. I'm taking buys, even if my stop would be right about here. And if I see this candle here, right, and I'm expecting a wick fill, my stops are going to be below those candles. You know, it could be over here, depending on your overall risk management, because you're expecting this to fill, but you don't know. As an example, if let's see, let's try and get a good example. Like over here as an example, you expect this candle to fill, you take a buy, and now you're dropping through. But you know that we could come back to touch support. So you have to manage your trade. You have to say, okay, if, for example, I'm looking at this wick fill, we lost momentum, we start dropping down. If we go below support, chances are we're changing direction. But if not, I have to give the room for the trade to breathe, because of where we are in the time of the session, and there could be a pullback. We had a full hour pullback, and then we started to climb back up. So this trade was still a valid buy, because if you're looking at your overall support and your resistance, you're hoping that, hey, we're not doing this. We're not going down, up, down this way. We should go down a bit and then carry further up. Similar to what's happening here. Maybe these are consolidation candles, and then we break up. If we break resistance, if not, then we're dropping back down to support again. So these are things that you have to look at, and these are probabilities you have to make. You have to say to yourself, I am willing to lose the trade. If I take a buy here and I put my stop loss here, I have to be willing to accept that if the trade hits my stop loss, I'm done. Not, well, if I just put my stop loss here or put my stop loss here, I would have been okay. Well, how about not put a stop loss anywhere? Just let the trade go down there, and then you're all the way back up there. You have to be accepting of the fact that you can lose a trade. It's okay to lose trades. What is important is, are you losing 1% or 100%? Right? That's the difference between good trading and bad trading. It's okay to lose 1%, 2%, 3%, 4%. That's okay. No big deal. Don't worry about it. It's not going to kill you, because days like this where the market does this, you're like, oh yeah, I made 25%, right? So suddenly this doesn't matter, this doesn't matter, this doesn't matter, because you got this. But if you turn around and you're constantly going, well, like if I just let it go a little bit more, or I do 10% risk, then I got a better trade. No, look logically and say to yourself at this point here, as an example, this looks like a pretty good support. We haven't come here in 1, 2, 3, 4, 5, 6 hours. So there's been 6 hours of movement away from this support level. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 hours at that support level. So what are our probabilities of us going back down if in 15 hours we haven't had a real push further down? So you say, what do I think? Down or up, right? And that's how you start to manage your trades. And then you look at the various time frames to give you a little bit more information on what makes sense at that point. All right, still muted. Yes, you will be. Blah, blah, blah. What's up? What's up? Can we just mute Ira? No. Can we talk about market behavior? Okay, I think I just did. Hey Ted, for the news this morning wasn't bad for the U.S. Why did the dollar drop so much? Well, once again, I think I explained that with momentum that we had. Are there different levels of supply and demand? Well, yes, based on different time frames. So different levels would have, with different time frames, would have different levels. It's just depending on how strong you believe those are. Ted, the daily candle on gold was bearish engulfing. How come such a Ted, the candle on gold was bearish engulfing. How come after such a bearish move we do not continue down and experience such a push up? Well, I mean, we go back to the daily. You can see we stopped at a support level, and then gold, basically this candle was bullish, and then we had a wick fill on the daily. That's what we were looking at, is the wick fill on the daily going back to a resistance level. So this was just a liquidity grab to pull further back up. That's my best guess. I mean, I don't know exactly what's happening. So with supply and demand zones, if you wait for price to return, there's a high probability for a reversal in a swing trade. That is correct. Can we discuss market behavior? I think I discussed that. How to get an entry with minimum drawdown? What do I need to look for? I just explained that. I have an issue where I trade off supply and demand, but 90% of the times it ends up being a retracement. For example, if we look at UJ 1 hour, there's a demand zone back on November 17th. All right, so let's go to the UJ hour. November 17th. Okay. I assume it's this one. Comes back to the demand zone. Yes, okay. Oh, yeah, but I mean, then that's where, if you can't find, okay, so the question here is, sorry, I'm assuming everyone can see this, but they can't. I have an issue where I trade off supply and demand 90% of the time. It ends up only being a retracement. For example, if we look on UJ on the 1 hour, there's a demand zone back on November 17th. I assume that this is our demand zone. I'll use that as a demand zone. When it came back up to demand on November 20, well, I would assume supply. Yeah, I don't understand. I'm trying to figure it. So when it came back to demand on November 21st, okay, there's no supply zones. Something I'm trying to figure out. Okay, so there is no supply zones. Your supply zone then would be probably this level here. So your demand zone is here. We almost we weren't able to reach that and we pulled back. I mean, that is an opportunity where it does happen, but then what you have to do is you have to look at the overall sentiment of the market. So your 1 hour time frames, you would then have to jump into the 4 hour, and that would give you a better idea that maybe now these ranges are tighter and that what you were thinking was a supply zone or demand zone is no longer, right? So you could say that this was potentially a demand zone. This was your supply zone and it was breached, and now we're here. Now we're creating a new zone to push further up or go further down. So you have to be aware of that too. They're not necessarily as, what I would say, obvious, if that's the right word, especially when we're making new market structure. Because here's an example: we're making new market structure. We never return to these areas. You might not necessarily return to them all the time in the near future, but it's something to be aware of, that as we start to move in that direction, looking left, where are possibilities where we could be heading? That's probably the bigger key in that question and answer. I always got support and resistance confused with supply and demand. Hopefully that cleared it up. Gold has been confusing for me. It's been moving weird. Well, not necessarily. You have to look on the higher time frames, and it provides you that information. And when you draw out your charts, you then see exactly what's happening here. You can see we're hitting certain resistance and support areas based on chart movement. Can you talk about overcoming mental barriers like fear of missing out or taking a trade knowing it's going a certain way, but you're crapping to press the button? I feel like we talk a lot about technical analysis, which is the easy part, agreed, but we need to emphasize on the human emotion and how to control it. I think with that, I'll try and explain it relatively straightforward. Emotions come from the desire to do something that everybody else is doing. Your herd mentality takes over a lot of the time. I think a lot of times what's happening in these chat rooms is people are getting caught up with what everybody else is doing. The chat rooms are used for support. You're there to ask questions, and I always tell everybody, ask questions, ask as many as you can, talk about analysis. If I don't see it, maybe DM me, send me a private message, I'll look at it, I'll give you some information. But when you mark up your charts, a lot of people have a bad habit of just showing a chart and then there's nothing on it and you're like, oh, this is what it is. Mark as much as you can on that chart and give a description of what you're doing. Maybe post your plan on your chart so that everyone has an idea of what you're looking for. The biggest thing here is confidence and education. Is, you know, everyone's doing different things at different times. You're not always going to be able to catch the trade when you think it is, but I mean, if you want to, you have to place pending orders to let your pending orders hit that. If you're just going to try and jump in because you see the market moving somewhere, you're going to fail. The biggest thing you have to do to overcome the fear of missing out is preparation. I am never fearing that I'm missing out on something because I have designated specific times that I want to look at the markets. The more that you're able to do that, the better off you're going to be. And don't tell me, well, you know, I work 20 hours a day and I only have 4 hours to look at the charts. If you have 4 hours to look at the charts, then maybe you have to start swing trading and looking at higher time frames and saying, okay, where are my support and resistance levels? And I have to take a trade above support or below resistance when I see momentum, but I have to place pending orders with wide stop losses and wide take profits. The more prepared you are to work in the markets, the easier trading is. Technical analysis can be taught in a few hours. You can keep doing this over and over on a simulator, and you'll be like, hey, I know exactly where everything works and how it looks. But if you are not necessarily putting the time in to prepare yourself accordingly and give yourself an objective viewpoint of the market, you will not be successful because you're always looking to chase something. I'm never chasing a trade. I know what I want when I see it. Like today, gold, like I said, if you were in that little Zoom webinar that Raquel had this morning, this is what I was looking for. I said, that's going to be filled. That's what I was looking for. That's my trade hunting. So when I looked at that on the daily, jumped into the 4-hour and looked right away. It pulled back. That's what I want to be filled. So all I did was I waited till we had that momentum, and I just wanted a piece of this action, right? Did I know we were going up here? Well, I have a line to say that we should, right? I don't know for sure, but once again, I was looking at this, right? This is your 1 p.m. candle. This is your 9 a.m. candle, right? And this is your 5 a.m. candle. I'm looking to fill this wick. So when I get up at 6:30, I want to fill. I need to fill this. Did I know the rest of this was going to happen? No, I don't know. But what I'm looking at is hints from the market. So maybe this kind of hint here doesn't happen every day. There was no hints over here. Well, I don't know what's happening here. We don't have a good idea. Right? Don't know anything about that. But when you get an obvious sign like that, maybe that's what you start looking for. Maybe you need 2 candles. So maybe you turn around and say to yourself, okay, momentum. I believe we're going up to here. So I'm going to take a buy position here. My stop loss will be down here, right below that wick, 4-hour. And I think we're going to hit this area here. This is how you have to map out your trades. You have to visualize what's happening. Here, as an example, I'm visualizing right now. Do we go down or do we fill this? How are we going to fill that? If we fill that, maybe I'm taking a buy stop above that level because we're going to have continued momentum. If not, I will wait for it to come into this resistance area and take sells positions and go all the way down. And I will look left. This is a key price level, looking left, right? Key price level now, looking left. We could have issues there. Issues over here, right? This is what you have to do. You have to prepare yourself before you take trades. I'm always looking to prepare myself before I'm going to enter. Should touches be the body or wicks or both? It should be where it makes the most sense. So I've done here, sometimes we've touched wicks, sometimes we touch bodies, but what I'm trying to do is I'm trying to give myself an opportunity to say, hey, where do we see reversals happening? You know, one can argue that maybe this is a support line here, like I could have drawn another support line, right? But I was looking clearly here, I was looking clearly here because we haven't touched it. This is what you want to go through, and you want to say to yourself, hey, what is making sense in terms of where we're touching and where we're going to pull back, and also psychologically, like we're at 1300, we know that that's a big thing for gold, so it's one of those things you'd also want to take into consideration as well. All right, okay, can you show the wick fill you mentioned? I just did that. Which is the best PDF for learning wick fills? There are refresher webinars on that. If your mentor hasn't given it to you, they should. I did a whole refresher on this as well. But when the account is too small, you should adjust your inputs and outputs better, right? Yes, of course. Manage your account properly, accordingly. Gold weekly last week was very bullish. Okay, that is correct. Basically, how do I not get fucked off retracements? You need more confirmations. Yeah, UJ could be down. So here you go. So here's your retracements. We're seeing things happening in real time right now. You look at the daily. So here you go. You visualize the daily. We're at a support level, right? Where could we possibly be going? Right over here, right? We could be dropping to that level. If we don't, where could we be going up top? Right? Over to this level. So this is how you manage your trade. If we're going to drop, maybe I'm putting a sell stop below here. Maybe it doesn't hit for a couple days. We don't know. There's holidays coming up. There's a whole bunch of information this week that, you know, maybe it's not going to happen. But if it does, where are we going to go? That's what you're managing, and that's what you're looking at in the overall picture. All right. Okay, good. Ted, about the brokerage, if I live in the US but I want to deposit funds in pounds, can I do that? Sure you can. Can you illustrate how UJ would break bearish structure? I think I just did that. If we come up here and we start pushing the other way, we then have to go past this level here to get full structure. Saw the link. Okay, hold on a second. Saw a link, got a bit late chance. Hope this is being recorded. Of course, yes. I just got on after you talked about supply and support and resistance versus supply and demand. Have to read so much conflicting information in books online, even from quality traders. It's not being recorded. Yes, it is. Okay, so we're good there. I'm looking to trade pound JPY. Is it wise to wait for London session to pound JPY? Yes. You might want to move from London. London is your best session to trade the pound. Are you generally trading what makes the most sense, or do you have a favorite setup? I'm just trading what I see. I see this whole concept of setups. I don't understand setups. Like, people always talk about this. The internet, people write messages on messages boards. Oh, if this candle pattern does this, it does this. I'm just looking basically simply at price levels. Where are prices, and how do I maximize my return out of those prices? Once again, I have documentation that I've written. Okay, so let me see if I can pull that up here. Here it is. Okay. Dun, dun, dun. Give me a second. TED Talks. TED Talks. TED Talks. No, not that one. Let there be range. Okay. So this is an interesting document. If you haven't read this in my files, please read this. Okay. So the document is called "Let There Be Range." Right? And it says, you know, basically what everyone says to me all the time. Ted, I'm not a successful trader. Blah, blah, blah. You know, so we talk about this. And finding range. What is important? Finding range. The idea is looking at what levels you have to get that information, get that, oh, I have a spelling error. That's what threw me off. Is where are we moving in that space, right? So you can see here, we're looking at specifically how much space we want, right? So here is a perfect example. Keep in mind, if you want 20, 30 pips, maybe your range has to be 200 pips, right? So, you know, in this case, if you want 2 to 3 pips, you need a 20 pip range. So these are mini pips, micro pips, so that's what I'm talking about here. So, you know, you're looking for a big zone. You're looking for big entry spaces, but more importantly, you're looking to get exactly what we want to do. So once again, when we go and we look at these zones and your range, right? So if we go back and we look at a 15-minute range here, and this is USD JPY, right? If I turn around and I want 10 pips, my range right now is 112.16 to 111.27. So you're looking at 110 pips, right? Once again, about less than 10% of the range. So I have to find 10% in here. So I'm looking for 10 pips. So if I turn around and I go through and I figure out, okay, we're breaking down, there's 10 pips. There's your move. And this is just a 15-minute time frame. There's 300, you know, basically 38 pips. You have to give yourself this definition. What the people make the mistake of doing is they turn around and they take this thing here. So let's do this. Let's clear this. So what they do is they say, okay, all right, so we're on the hour, and I don't like that stupid objects list. All right. Edits. Okay, so go back to this. They turn around and say, okay, this is my support and this is my resistance and this is my support, right? So you have now, when we go through this, 113, 113. So you basically have a 20 pip range, right? So you took a 20 pip range and you're like, okay, I think I'm going to take a sell, but I need 10 pips. It's so tight. This range here is so tight to get 10 pips. You literally have to catch like a whole big candle that way. But then look what happens. You get this shit. You get these small little pieces of shit. You get this shit. That is a very, very tight range. So when you look at stuff like that, you have to then adjust and you have to say, okay, fine. If I want 10 pips, I have to think of something that makes more sense, right? Okay, so maybe this makes more sense to me, right? So what I can say to myself is, now I have 113 to 111, so now I've got like 100 pips. So even if we bounce off this support, so if I think this is support and we start bouncing off of it, and I just need 10 pips, we've got 110. This is your full range now. This is your key to success at this point. You have this full range. If I look here and I take a trade over here, look, at 56 pips, we start dropping down, but I only needed 10. So I can screw this up so many different ways that, you know what, I could take a trade here, take trade here, take trade here, whatever, getting my 10 pips, and then when it starts to go their way, I'm out because I'm at the bottom here. It's the same thing over here. Once we start moving away, if we only want 10 pips or so, you know, if you turned around and said, okay, where's the support level? If we said, okay, this is your support level at this point, right? So just for argument's sake, you have, once again, you are looking at 111.9 to 111.15, right? So now you have 80 pips, basically, well, 75. Sorry, this is messy, so let me do that one more time. So you have 75 pips here, right? You just have to look at this area here and say, how can I get 10 pips out of this area if I've got 75 pips, right? That's what you're doing as a trader. So now when you start to jump in and you say, okay, fine, let's jump into the shorter time frames. We're in the 15-minute time frame. Okay, we can see a little bit closer. We're in the 5-minute time frame. Now we can see even a little bit more. So you can start to see in the 5-minute time frame, this was probably, you know, a resistance level. This is a support level. So we know in this frame here, right? So if we do this rather quickly without drawing more lines, you can say, okay, what's the range between here and here? We've got 18 pips, right? So maybe at this point you want to take, you know, a few pips. You can't get 20 pips or 10 pips out here because you're going to have to match it up right to this resistance level and go back down. So what you say maybe to yourself is, okay, if we break up, I want to take a buy stop here. This is your buy stop, right? Because we're going to break up to this support level, or I'm going to take a sell stop to the to resistance, and then I'm going to take a sell stop. So for the fucking love of God, just Jesus Christ. This, okay, buy stop. Sorry. It's hard to write with my right hand when I'm left-handed. This is your sell stop, right? So then you're going to say, I'm going to take a sell stop here. My stop loss will be above this area because if I was taking a buy stop, I assume we're going this way, so I would not want to be in a trade once it goes in that direction, and my sell stop would be over here, and my take profit would be before your support level. So once again, you turn around and you look exactly what I'm doing. I'm looking, saying, okay, 22 pips, okay. Full range is about 25, so maybe I just want 10. So once it gets activated, I know I have enough range to get that. And then what you say to yourself is, okay, well, what will be my risk management? So 3 pips, so we want to maybe drop it down into over here, which is probably a resistance level. So if we go back up, we're probably moving that way, or we want to go further back down in that direction. So 25 pips up, about 25 pips. So you're almost pretty much good with that example. You're at a 1-to-1 at that point. So that's what you would be looking at as you go through that information. Um, how can I convince myself not to over leverage? Get a job. Um, Sorry, I was just drinking. The biggest thing is I don't understand what the rush is with trading. If you are only making $5 a day trading or $2 a day trading, what is wrong with that? Do you not like what you do? If you have a passion for something and you really, really enjoy this Forex stuff, you shouldn't care how much money you're making, because to you, this should be a hobby, and then it should go transition into something full-time. And if you're making this a hobby, you should be doing it with relaxation. You should be enjoying yourself. It should be a game for you. You should enjoy it. When I started trading, uh, when I do this, when I started trading, it was the same thing when I played poker. I loved playing poker. I would play for $5 a game. I would play for $500 a game. It didn't bother me. I just enjoyed it, and I wanted to challenge myself. The money was not important to me. I like to win, but more importantly, I love to play. So Forex has to be the same thing. Forex has to be something where you thoroughly enjoy it and you're not worried about the money, because the money will come after you realize how much you like it. If you're sitting here trying to make money off of Forex because you think that this is going to buy you a Lamborghini, this is going to buy you a brand new house, this is going to buy you a watch, this is going to buy you shoes, you have the wrong mindset. Your job will get you there. Your job will get you the things that you want. This will eventually take over your job when you realize how passionate about this you are. It's the same reason why I teach. I enjoy this. I love talking Forex. I can talk Forex 24 hours a day, 7 days a week with anybody. There's just so many things of so many different types of strategies, so many different types of nuances. You know, where did we look here? What did we do here? What did we do there? You know, it's exciting. So the passion comes from the enjoyment of learning something and challenging something, but then the passion also comes from hearing other people talk about how excited they are, you know. And when I see people not put effort in, and I don't mean that not everyone's putting effort in, because I know everyone does it at their own pace, but someone just throwing a chart into the groups saying, what do you think? That's not passion to me. That's just somebody looking for answers. That's just somebody who just wants to click a button, collect money, and leave. You're not passionate about this. There should be a thorough engagement. You should enjoy what you're doing. And that will then take away that over leveraging and the idea of I need to chase money. Because no longer are you chasing money, you're chasing the strategy of, you know, when you look at trading is, hey, I got one trade right today. I got two trades right today. I got three trades right, 4, 5, 6, 7, 8, 9, 10. Perfect week. That's what I look for. This is what I want. Like people saw like Instagram posts and my IG stories of like, wow, Ted doesn't take a loss, because I pride myself on this. This is what's important to me, making correct decisions, not the dollar value. I don't care if I make 1,000. You'll see sometimes I make 1,000, sometimes I'll make 10,000, you know, 20,000, you know, 8,000. Maybe sometimes I'll make 700 bucks. It doesn't matter. This doesn't matter. This matters to me. Perfect. Not making errors in my trading. So I wait for the opportune time to trade. While all you guys are sitting there in the chat rooms going, oh, well, you, Jay, in the Asian session, Ted's doing this. I'm sitting back watching my TV. I got a big screen TV in my living room. There's some person on there that I don't know. He's doing this. He's doing some car chase scene with some guy over here. And you guys are like, oh, and I'm just looking at this going, what the fuck are you guys doing? I wouldn't even bother that. But then today, I saw this. Oh, big candle, big candle. I was like, yep, that's what I want. I want this stuff. That is what I'm looking for. And this is where you have to get to when it comes to trading. So you know what? Take your TV, turn it on. You know, maybe you watch porn, right? So there's some guy with a big penis, right? That's a big penis. He's got, you know, a lady with big boobs, right? Sorry if I'm offending women, but that's what porn is. You know, they're like, hey, maybe you have to do that, right? Instead of doing this. So that's exactly what you need to figure out, is where is your passion? If your passion's for making money, you then have to work on this and say to yourself, what makes the most sense? Okay? I'm sure you came close to blowing an account before. Yes, I did, because I didn't follow my plan. That was my biggest problem. So my orders, my entries are only pending orders. For the most part, yeah, let the market come to you. Why chase the market? It's stupid. You can set it up and just let it come. The, the, the biggest problem is everybody wants that instant gratification of that they made a right decision. I'm a confident motherfucker. I believe that I made the right decision as soon as I set the order. I'll let it come to me. I'm good. Whether we go, whether we go up, we go down, I'm right. This isn't a test. There's no teacher marking your exam going, well, you can't have up and down. You have to choose a direction. You don't have to choose a direction. Do whatever you want. There's such a stigma associated with setting pending orders. Like you're making an error. Like, oh, I set a pending order and it hit and I went down here. And then people are like, well, I knew it was going down from like up over here and we were just going down. So I don't know why you were over here. Who fucking cares what people said over here? You're happy right in your comfort zone here? Perfect. You're going to get the trade that you're looking for. If you're too busy watching these people up here going, oh, I could have taken a sell over here, or I could have taken a buy over here, you're killing yourself. Take the easy trades. Make trading simple for yourself. All right. What's my Snapchat? I don't even have that. Or watch Suits. Yeah, you can watch Suits. Yes, women like porn too. Okay, I've been reminded by the ladies of Forex Family. They love porn too. All right, so I'm waiting for more questions. I think I've answered a lot of them. How far from the consolidation range in pips would you place your pending order if you were risk 10%? Well, I mean, that is, you have to understand what you're looking at in terms of your pending order, right? So let's look at this example once again. If this is, my support or my resistance and my support level, right? And I'm looking to take an entry on the 5 minutes. So I've gone through my 1 hour, I've gone through my 4 hour, and I've said, okay, yeah, market's going down, okay. I have to be willing to accept drawdowns, and you have to be, willing to accept that. Your stop loss, look to where price could go back. Where was their price? Like you can see here, there was wicks here. So where could we possibly go down? Where could we return to before we go further down, right? So a better example of that is if you go in a little bit, if you zoom into this area here, right? So you say you took a buy or took a sell position here, right? Because you've been watching this happen, right? So your idea is we're going further down that direction. So you take a sell right here. Your stop loss has to be above this, but more importantly, it has to be above areas of rejection so that you can go up here. So then what you have to say to yourself is, okay, if I'm risking 5%, right? So I'm risking 5%. I have to give myself enough room for 5% to get 5% risk. So I have to determine my lot size and I have to determine my stop loss and take profit. So as an example, what I always do is, okay, if we turn around and we box this in, this is our consolidation. We all agree that this is where we want to be. And we drew support and resistance on the smallest time frame that you have. Your stop loss has to be above here because you don't know that price won't go down, up, down, and then do one final retest, which is above your stop loss, and then further drop further. So you have to look left and say what makes sense here at this point. And you can use higher time frames as well to give you that information too. But I use the smaller time frames just so that I could say, okay, now that I'm taking a sell over here, I want to make 10 pips. So my 10 pips has to be here. So 549 to or 540 to 440. I have to expect this drop. There's your 10 pips up. So you can already see we're out of that box. But if that doesn't make sense, right? You're already touching this level here. You have to go up a little bit higher. So you have to go maybe to 15. So then we have to go back down here to 15. So that's where you would turn around and you go into your higher time frame and you would say, okay, what makes sense to get 15 pips? If it doesn't make sense based on that information, so what we'll do is we'll go back into the 15 minute now. So we were looking at, I think we're looking at 2020. So we go once again and we box this information out on the 15-minute now, right? This is sort of, you know, your box because we're not really moving anywhere. We were moving sideways. Where would my stop loss be? My stop loss has to be up here or even up here for a potential pull up to go further down. Now your take profits, you always want to go before support because you don't know if you're going to break support. So maybe your take profits are over here, and then you have to measure that out before you take the trade. So what you're doing is you're turning around saying, okay, if I'm taking a trade here, as an example, a sell, this is 30 pips. Okay, going up here, you're at 30 pips, so you go across, that's about 30 pips, that's my stop loss. Then what I'm looking at is I have to make sure that I allow my trade to run that way, but my trade could pull up 20 pips. You have to accept that. What you have to be doing is watching your higher time frames to say, hey, what makes sense? We have momentum on the 4-hour frames. We're just not going to pull back right away. It's very rare that we drop and then we go all the way back up this way. Like, just look at the charts realistically. We came down into support level, pulled up, but look, when we get momentum, where do we go? We're still pulling hard. Momentum up, and then you can start to see the candles pulling. You can even see here as an example. Look at this, huge wick fill going to happen on the 4-hour. It doesn't happen the first 4 hours, it happens the second. But more importantly, as you look at that, look at the wick. A little bit lower, a little bit lower. This one's a little bit higher. So if I put a stop loss over here, I should be safe to fill this wick, right? We should not return to this level. If the trade is valid going down, we should not return to these certain levels because now you've seen how we haven't broken these little resistance levels in this little circle, right? So if we visualize that, what we're looking at is we're going up and then we're going back down. My stop loss goes above that peak so that we start trailing down and that I'm able to then take profit at that point. Where are we taking profit? Closest to our support level because we don't know we're going to break this. Once you get to this level and you're like, oh yeah, Ted, like I'm the best at trading right now in this past 5 minutes, and I'm at like 300 pips. Okay, now you put a stop loss, move your stop loss over here, let it keep running, and then you're like, oh yeah, you know what, Ted? Well, you know, I just blew it out of the water because I wanted only a wick fill, but then I got like all this, and I just kept going, and then I'm over here, and my stop loss is now up over here, and I'll let the trade then once again do this. Your trade will then go up into this area and back down. Or maybe we go back up to here and we go back down. That is what you're doing. That is how you are visualizing the market movement at that point. Okay, so this, yeah, Billions was a very good show. They are coming back in, I think they're filming right now for January 1st, 2018. Okay, did that question. What's your best advice for us in general? Quality over quantity. So don't overtrade. Take quality setups and just enjoy the moment. Is there a webinar on how to raise pending orders? There's many webinars about that. Sorry if I asked or answered this question. Do you have a weekly percentage or pip goal? Thank you. Yeah, I like 10 pips a day. Just 10 pips. 10 pips, 15 pips, 5% a day, 1% a day. As long as I'm positive, I'm happy. I've looked at my overall positivity is probably around, like I would say on average, about 13 to 15% a day. So if I do 5%, I'm happy. I don't need the average because there's some days where I do 5%, there's some days I do 1%, and then like days like today I did like 40%. Great job. Market just kept giving me money. I'm happy about that because I know as you trade more and as you become more experienced as a trader, you're going to see these days where there's no pips and you're going to be like, oh, this day sucks, not good trading. I see those days now. I don't even open the charts. I'm like, I don't want to do any of this. This is a waste of my time because I know there's certain days in the week that will give you the majority. Tuesdays, Wednesdays, Thursdays, you get so much more action out of the markets than a Sunday night or a Monday or a Friday. Sometimes Friday explodes and you get pips too. You really just just have to plan accordingly. And as you journal more, and this is the most important thing, is as you journal more, you will start to see patterns. Holy shit, every Wednesday I'm getting like 25%. So you will sit like a kid before your birthday, the night before you're getting your Nintendo or your Sega or whatever you were getting when you were a kid, maybe a pair of socks, I don't know. But you were like, it's my birthday tomorrow, I'm getting shit. I'm going to get some crazy shit that I've asked for. And that's what I look for. Like today, I looked at that candle on the 4-hour with gold and I'm like, oh my gosh, I'm going to make a shit ton of money today. And I was so excited and I was like, this is crazy, crazy, crazy. I'm excited. Even in the webinar at 7:30, I'm like, guys, we're filling this wick, and then it just kept filling. I was like, oh my gosh, there's so much money to be made. But I wasn't excited about Monday and Tuesday. Tuesday, I'm like, whatever. But today was the day I got excited. And I wasn't excited, uncontrollable emotions for the charts, but it was just the opportunity that presented itself. And as you trade more and as you study more, you will see those opportunities and you will say, holy cow, this is what I've been waiting for. And then that's where you get your 15% days, your 20% days, maybe your 60% days, I don't know, whatever you're doing in terms of your risk management and your full margins and your half margins and your spreadable margins. That is what you're looking at, and that's what you're hunting for every week. You're going to get those opportunities. It's just the way the market structure is. Price always retests when it's broken? Not necessarily. We saw this. Look, we just kept going. There was no retest here. Wakar is asking, when will you reveal that you use EMAs and show us how to use EMAs? Wakar is the master of EMAs. I don't really look at that as an opportunity for me to get better at that. Maybe one day. How do you know a reversal is going to happen and wick exhaustion? Well, once again, you don't know that exhaustion is going to happen until you see a major support or resistance, and that's something where you have to look left. So once again, when you study the charts, look, we're at a major support level here. We're starting to pull back. Is this a reversal? We don't know. This is a brand new day, so we don't know if this is going to go up now or this is going to go down. Can you show us exhaustion candles? Sure, I can. Look at this. I'll even open up a chart for you. Oh, surprise, here's a chart. Oh, we tap resistance, exhaustion. There you go. Pretty easy, eh? Oh, tap resistance, exhaustion. Oh, look at that, surprise. Oh, tap resistance, exhaustion. Right. Oh, tap resistance, exhaustion. Oh, tap resistance, exhaustion. I don't know. Right. Oh, wick fill. Momentum up. Why? Coming from support. Oh, yeah. That's all it is. Don't try and make things more difficult than they are. Please don't. Okay, you're going to look at this and be like, well, like the vector of this angle here is not congruent with this one, and like there's a sun over here, and then it was raining on my flower over here. So like I don't know if that's going to go up or down. Just look at the charts. If you have to, give yourself an opportunity, screenshot it and say, okay, we've come here. Are we going to go back up and do an around, or are we going to go back further down? That's all you should be doing, is just really looking like, oh, this is interesting. Oh, look, momentum. Maybe we're coming to here again. Don't know. This is what we're looking at, and this is what we're saying to yourselves, is anticipate where we are moving. And this is where you will have success. Anticipate your opponent, okay? You look at this information here and you're like, okay, we're pushing up to maybe go further down. Or I wait a couple of candles to go further back up. Where could we be going to? Where are my targets if we're going up? Just anticipate the market movement and trust your analysis. And don't be afraid to be wrong. You really have to accept the fact that you will be wrong sometimes. And if you don't want to be wrong, set pending orders. Put pending orders on both sides. Play both sides. There's no reason why you can't play both sides. It's not cheating. Like, I don't understand. If somebody told you, please make money, and you said, well, I have to pick and they told you, you don't have to pick up or down. You can pick both sides. I'd be like, hooray, I win all the time. Because it's either going to go up or down. Like, this is the best thing to do when you're trading. You're either buying at support or selling at resistance. You just have to figure out where that's going to happen and when. You can put pending orders today and they could be activated next week. What's the hurry? What are you worried about? You are trading your money. Excuse me. There's no one telling you how much you have to make, how you have to do it. You have no shareholders. I do not believe anyone has ever come up to me and said, Ted, listen, I am trading for my own firm called wicketywick.com, and my shareholders have told me if I don't do 10% a day, I will be kicked off as CEO of this company. Please help me. Nobody's ever told me that. So what are you so worried about if you put a pending order here, 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 here? You litter it with pending orders, you set everything accordingly, and you just let trades run. What is the problem with that? I want to know what psychologically the problem is. Do you feel you're not making progress? I think it's more progress to keep money in your pocket than it is to keep losing trades that you're trying to chase. That's progress to me. Like if I go to the store and I go buy something for 80 bucks and it's on sale for 60 bucks, that's progress to me because I was expecting to spend 80, but I only spent 60. So I got 20 bucks in my pocket. I don't turn around and take that 20 bucks and go buy something else now. I was expecting to spend the $80 because I didn't spend it. I still have 20 bucks in my pocket. The same thing with trading. When you trade, if you didn't lose, you're still ahead of people that are losing, right? You have to think of this as a long-term race. If you have $1,000 and trader B has $1,100, yes, they have $100 more than you. But if trader B trades all week and loses $100, you have now matched him or her without doing anything. Do you see how much more success you had? You didn't have to worry about, oh, is this trade going to hit my stop loss? I'm going to hit to take profit? No. You were looking for your opportunity and your optimal setup. All right. Okay, did that. Did you find out who got a beating on that webinar earlier? No. I have a Snapchat. No, I still don't have Snapchats. Looks like Head and Shoulders. Great. Okay. I'm a swing trade right now. I short my entries around 111.8 and 111.40. Where should my stop loss be? Well, what's your trading plan say? Like, you know, so you're like, I don't know what your gain to loss is. So you said you shorted orders at 111.80. Okay, so 111.80. So your stop loss would probably be, give me a second here. So your stop loss would probably be up over here, daily candle, right? 112.490, right? You know, you also have your support and resistance levels here. Like I drew this resistance level. Maybe this is a resistance level. You know, you just need to figure out like where you think we could possibly pull back to. This seems to be like a resistance level at this point. So maybe it's 112.700. And then you're going from 111.80, you said, like 80, yeah, okay, whatever, close enough. 80, so then maybe you're going now to 110.80, so you're going to this level here. So that's a thing to consider as well. So you know you have a 1-to-1 risk to reward ratio. So you want to put it above that because you know if we pull back, chances are we're going back in that direction. Okay. That's your daily. All right, thank you, Ted. I need to leave. Okay. Enjoy. You can leave anytime. You don't even have to show up to these things. I don't care if anyone comes. Sometimes I like talking to myself. No problem. Is there any other questions? Let's take a look. I don't see questions. It's oh, Ted, you've helped me so much. Oh, that's good to hear. I'm glad I've helped one person today. This afternoon I was told I didn't help anybody and I should manage mentors better. So people are telling me to stop. They're like, great webinar. Nobody wants to ask questions. I should do one of these on Instagram, do like a live webinar and open up to everybody. Oh, could you imagine the carnage in these? Oh, well, you know, like, how do you place a stop loss if your trade is here? How do you use MT4? Blah, blah, blah. Oh, I heard your demo. Can you tell us how to trade demo pips? And oh, don't you trade Bitcoin on this? Can't you trade Bitcoin over here? I traded Bitcoin last week and it went up 6,000%. And then I tried to withdraw it and then crypto processor took my money. Oh, really? Congratulations. Oh. All right, great webinar, great webinar, great number. Broker questions? Yeah, you want to ask broker questions, we can do that. Oh my God, please no. What's your advice management if my goal is 100 pips as a scalper? Well, it's not the pips, it's your return on investment. You can do 100 pips at like 10 lot, you can do 100 pips at 1 lot. You have to look at risk management. Out of your mentors, who's the better trader? Rakil. Um, let's see. People get a kick when I start using my split personalities. That's good to know. You'll be able to use your own name, correct? Okay, so let me do this. Let me stop recording. So this will be done. Congratulations, we're stopping recording.